Hello everybody and welcome back to the channel. Today's video is going to be a little bit different. I'm going to be showing you guys what I've been buying during this market crash and what I plan to buy moving forward. Now, as you can see on the screen, my portfolio value is only currently at $17,000. Out of that, I only have about 10 grand invested. The rest, as you can see, I have here in either cash or in puts on the top right hand side here. And if we take a look at the past week, with everything that's been going down in the market, yes, my portfolio is a little bit volatile. I am down 5%, which is about $933. And however, we take a look at the overall year today, I'm only down 1.3%, which is about $251. So now let's get into the stocks. I'm going to take a look at the main ones. For example, I'm not really sure if I should go over Amazon. I only have really 2 shares. It's about maybe like a percent or 2 of my portfolio, actually 4%, which is not terrible. My average cost is 165. I do plan to continue buying this stock if it drops below maybe 150 or below my average cost, but if it does not, I'm not even going to touch it. This is just a small position. I do believe Amazon will be worth a lot more, but Amazon is not the type of stock that I want in my portfolio. I'm just taking advantage of the situation because I do like stocks that pay a dividend, because I want to have some sort of income when stuff like this in the market happens. That's why one of the tech giants that I've been buying, it's Google. As you can see, it's currently at $142 per share. My average cost is 150, and it's about 16% of my portfolio. I have about $1,200 of market value invested in it, and that is a total of 9 shares. Now, I love Google, not only their business, not only their stock, not only the company in general, but they do pay a dividend as well. And I do believe the stock is undervalued, specifically now where they're trading at around levels of like 2019 or 2022, if I'm not mistaken. Yeah, basically on October of 2021, we can see Google was around $148 mark, which we're back to those levels now again. And I'm just gonna keep buying it slowly but surely. Google can't even reach the $100 mark. It wouldn't surprise me, but I'm still gonna keep buying it because this has huge growth for its dividend. It's still huge in the market. It has a lot of moats, so I don't think this company is going anywhere. Now, I like to keep my portfolios mostly ETFs. The 3 that I own, you're gonna see them in this video, but let's start with this one, which is SCHD. Currently, my average cost is $26. I own about 37 shares, which is currently about 11% of my portfolio. I definitely have to get this up. Between my 3 ETFs, I want it to be a total of about 70 to 80% of my portfolio, and the rest individual stocks, just because I don't consider myself to be the smartest guy out there, okay? I just like investing. I think you need it for your future. I've seen a lot of people around me that are still working, being 70 and 80 years old just because they can't retire. So that's not my plan. Obviously, I want to enjoy money when I'm young, but I also want to enjoy my old days. So my currently market value is $180. We're down about $100, but this is a stock I continue to buy. Also, if you're not following me on the Patreon, the link is in the description. I tell you guys when I buy stocks and what I buy. I've been buying pre-market, after-market, night market, 24-hour market, everything, and I plan to buy a little bit more of the stocks as well. So if you want to know when I do buy stocks, make sure you click the link below. Now, this is a company that I have been really losing from some time now. I've considered closing it, but I'm just too hard-headed to close it because I believe the company can do well in the future. It's Pfizer. I have about 43 shares. It's 11% of my portfolio. Is way too high. I'm gonna invest a few more shares here, maybe when I get to like 50 or 60, just to average down my cost the most as I can. I think Pfizer will keep dropping in this market, but as you can see, I'm down about 33%, which is $459. I'm gonna buy maybe 10-15 more shares at around, if it gets to 17 bucks, something like that, to average down my cost, and then that's it. If by in a year or 2 it doesn't go up, I'm just gonna close the position. The good thing is that since the stocks are going down, the dividend is increasing, so I don't mind that. Here on the right hand side, if you can see, I have Vici, UPS, and Nike, which are stocks I'm not gonna get into. This is just very small positions. Maybe actually I will get into UPS, just because I think this company has a lot of room. They do pay a great dividend, but their dividend payout is like over 75 or 80%, which is not good, but it's not really terrible. It's only 4.68% of my portfolio. I have 4 shares and my market value is about $360. I want to have at least 10 shares of UPS, but not at this price. I think anywhere between 75 to the $82 mark is where it's at. So that's where I'm going to keep investing my money. I'm not going to buy any more now unless it drops below the $85 mark. I might add one more, and then if it keeps dropping, I'll just continue to add until I have 10 shares. Let's just take a look at Nike for the sake of it. Now, my average cost is $56. It's only about 1% of my portfolio, only 2 shares, $104 of market value. This is another company that's been having some trouble due to the news that came out with the tariffs and stuff like that, since they do manufacture a lot in China. But I think, I mean, Nike, if there's a brand with moats, man, it's Nike. I've seen people buy at the store $55 shirts that they cost them $1 to make, okay? People love the brand. I mean, the brand is great. The clothes, you could run, you can sweat, you can rip them apart. I mean, it's a great brand. That's why I think they're gonna overcome this. However, I do think $52 is a little bit expensive. Obviously, I did buy a 56 just because I wanted to have skin in the game. But I think around the $37, $45 mark for this stock is where I'm going to go in heavy. Probably around 20 to 25 shares, since I don't have a lot of capital, but that's the plan for Nike. Next up, we have my S&P 500 ETF. As you can see, the total market value is about $2,183. My average cost is 65, and this is about 28% of my portfolio, which is about 38 shares. This I have to increase a tiny little more. I want my S&P 500 ETF to be 30% of my portfolio. We're very close. I'm still buying more shares every single day, especially at these prices. And if by any reason, which I'm hoping it does, because I don't care losing money in the short term, and you don't really lose money unless you close the position. If this falls to the $40 to the 30 something dollar mark, I'm going heavy, guys. I'm going heavy. This is not financial advice. I'm selling my car, my house, I don't know, but I'm going heavy on these ETFs. Every single time stocks come down or the S&P drops, it comes back up. It doesn't matter if it's a sickness, if it's a war, if it's a market crash, whatever it is, the S&P 500 always comes back in history. Then last but not least is my SCHG, which is my large cap growth ETF. I have about $919 invested is about 11% of my portfolio, which is 42 shares. This is another ETF that I have to increase. I want this to be at least around the 17 to 20% mark. So if I have the other one at 30, this one at 20, that's 50. That means I have to have SCHD at around 30 or 20 to have my portfolio based ETF at around 70 and 80% overall, which is my goal. I just think it's safer that way. They're gonna give you returns, and then you have another 20-30% to spare to buy stocks like Google and Amazon and just make the risky plays. This is the last stock on my portfolio, which is only 2% of my portfolio, 2 shares. Average cost is 94, and my total market value is $173. Target, it's not a terrible stock. It's not a terrible company. I love the company in general. How they're gonna overcome this, I don't know. That's why I've been adding to this position very slow. I think my next buy is going to be around the $83 mark, and then if it falls below that, around the 60 and 70 is when I will go heavy. But for now, I'm really not going to touch it a lot. And for the companies that I plan to buy, American Express and Microsoft is going to be one of them. I think Microsoft is still very far from the price that I want to buy it at, but American Express is very close. So you can see it's currently at $224. If this stock can fall at around this support area to below the 200 mark, I'm going to buy maybe 5-10 shares. It's a great stock. It's growing its earnings. It's growing its revenue. I love American Express. Obviously, the big players in the market is Visa and MasterCard. But there's just something about American Express that people love, okay? The customer service, the way they treat you, the way they solve your problems, the interface in their app. I love everything about American Express. I love the company. The numbers are amazing. They have a great dividend. So if this stock falls below 200, I'm going to invest in it. And that's about it for the video, guys. Remember, if you want to know when I buy or sell stocks, please look at the link below, the Patreon link. It also helps support the channel. Maybe with that, I can buy a better mic. If you go on there and help me out, you know, make better quality video. Maybe I get a camera and show my face someday, although I don't think I'm gonna do that yet. I'm kind of shy. I don't know how that's gonna work, but if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.